In this video, I'm gonna show you how to make $800 trading a delta neutral option strategy on silver futures options in this month. Let's get to it. Silver right now. Search, first of all, open Tasty Trade, search for SI. If you don't have it, go to watch list right here, and in watch list, click on futures, and in futures, scroll all the way down to right here. You see futures with options. And in here, just search for this one /SI. See the price today down almost 1%, 0.9. And I'm gonna show you a way to make $800 selling a short strangle, a delta neutral option strategy. Collect 800 bucks, and for the extreme that silver will not go there, let's make this trade happening. So what do we know? The price today 31.57. Now you gotta understand, I don't care about RSI, MACD, all that stuff. All I care about is that the silver will not go so far to the extreme. I will use math, I will use statistics, I will use numbers to my advantage to make this trade happen. I will see theta decay, and I will close the trade early and collect my income, get out and move on with my life to the next trade. So what do we have here? This is all the indicators that I use, and we go over them one by one. The first one, the most important indicator to me, is this one, ATR, average true range. This is the price that the silver future have moved on average in the last 14 days. Okay, let me repeat. In the last 14 days, see this number 105. This is the price that silver have moved on average every single day. They moved $1 up, dollar down, dollar up, dollar down, on average in the last 14 days. I'm gonna take this number 1.05, I'm gonna multiply this by 8. Why 8? Because I want to go so extreme to sell options, so extreme. Remember, I don't gamble. I don't buy call options and gamble that the price of silver will go higher. I don't do that. All I care about is for silver to not go so extreme that it will do 8 times the average move in the last 14 days. So I know this is the number, about 8 bucks, and I know the price is 31 and a half. So I will aim for about, I don't know, 40, something like that, 39, 40 on one side, and 24, 23, 24 on the other side. Depends on the income that we collect. Remember, the goal is to collect enough to actually make this trade work. So if it's not 8 ATR, this is like the standard, but if I do 6 or 7 ATR, which will still give me 800 bucks, yeah, I'll be a happy camper. And remember, the goal is not to collect the whole amount. The goal is to collect theta decay, be in the trade for a week or two, use the time decay to your advantage, close the trade, make 50%, do whatever that you want, move on. Do this again and again and again and again. This is how you make extra consistent income, but being less in the trade, but collect the income. Okay, so this is the first indicator. The next one is ST squeeze. This is like a version of TTM squeeze. I'm looking for a green. A green means, very simple, green means in this chart that the price of silver theoretically, not 100%, but theoretically should go nowhere. Okay, as of now, when it's red, it means that it's about to jump, to squeeze up or down. When it's green, it means that it should go nowhere. So that's important. We have green. Remember, I'm doing a delta neutral option strategy, a short strangle. I'm gonna sell one naked put and I'm gonna sell one naked call. You cannot do this on Robinhood. Robinhood doesn't have, first of all, naked option selling feature, and second of all, they don't have futures. That's why I like Tasty Trade for that. Robinhood is Checkmarks, different story completely. Okay, so as long as this is green, that's checkpoint number 2. This is checkpoint number 1 to get the number, to have the range. We got now the number of 8. Checkpoint number 2 is that this is green. Checkpoint number 3 is, yeah, about half a check. What does it, look at this. This is the next indicator, IVR. You see here the price 53 and 39 is the low, 53 is the high. I'm looking for above 50 on both of them. One is above them, one is below. That means if it's over 50, this is just a general rule, you don't have to follow this to the exact, but if it's over 50, it means that basically the price of the options, the premium that you collect as an option seller are more expensive. Or if you're a gambler and you buy call options or silver or put options on silver, you will pay more based on history, and that's why I like to sell the options. Next thing that I look is the Kettler channels. Again, I also changed the default settings to 50 and 8. I think it was 20 and 2. Also to the extreme, I want the stock or the future options that I'm selling to be in the blue line. The blue line is the range. The blue line is the range of 8 times the Kettler channel. And you see the top of this is 39.5, 39.8, let's say $40, is so extreme that if it goes there, it will theoretically should drop down. And on the other side, we got 23, which as you see, remember we collected the number of 8. The range is 8. We are now at 31. Plus 8 is 39. Minus 8 is 23. It's the exact same thing, almost to the dot. The average range is $1. 8 times the extreme is $8. And if you move $8, the Kettler channel, which is already extended times 8. That's why, to me, it's not a safe trade until you close the trade, but that's another check mark to make sure this is around the blue, so I know that I can sell options. So far out of the money on both sides to make this trade a delta neutral trade and try to collect $800. So let's see what's next. The next part is you're gonna click on trade. I already filled the details for you right here. Already filled the details. I have picked December 26. You see here 48 days to expiration. Sure, you can do the November 1, 17 days, but the income will be, I don't know, 90% less. Okay, that's why I like to go 45, 50, just like Tasty Trade said, 45 days to expiration and start closing and managing your trade at 21 days to expiration. So be in the trade for like 3 weeks, collect the premium by then. If nothing happens, the option will lose value every single day, which I'm going to show you exactly in a minute. So December 26, 48 days from now, and I've done a delta neutral strategy. Delta neutral strategy, a short strangle, is selling naked put on one side. You see, I have picked 25 put. Okay, this is the put side. 25 put on one side, right here. Okay, and remember the price is 31.5, and we did time 8 times is about 23, 24. But the income is low, you see, 11, 12, So I picked the 25 on one side, selling naked put 25 silver on one side. Remember, we're at 31. 25 is like 30% drop. Remember that. If silver drops 30% in the next 40 something days, yeah, we could be at a problem. But what are the chances? I'll show you the chances in a second. There's 95% chance that it will not happen. But let's get back to this in a second. And on the call side, we are selling the naked call, the 38. Now I can't do a Jade Lizard because it doesn't cover the 38.25, but I'm gonna check this in a second. But if you sell the 38 naked call and we are at 31, again, that's about 25% jump in like a month and a half to get to 38, which you saw is 8 times the Kettler channel, 8 times the ATR. Can it happen? Sure, anything in life can happen, but for that risk that you're taking right now, you take this trade, and let's go over the details. You are collecting $820. This goes into your brokerage account today. This is your money to keep, but you do need doing some management, so let's go over the management stuff that you need to do. First of all, let's summarize the trade. You sell the 25 naked put on one side, and you also simultaneously you sell the 38 naked call. You got a 95% chance that this option will expire worthless. That's silver, meaning silver will trade between 25 and 38. We are at 31.5. Okay, Those days are good. Listen, look at this. It moved 0.8% down, which is a quarter. 0.25 pips. Okay, 25 pips when you know that the average daily move is 1. Okay, that's how 1 is like 4 times that. That's like 3-4% a day. That's how crazy silver moves. Okay, this is I wouldn't call it high risk. Everything is high risk at the end of the day. If silver shoots to 100 or drops to 10, yeah, we could be at a loss, a major loss. It's part of the game. But for that risk that you're taking, you're collecting $820 today, 95% chance that this option will expire worthless, and silver will trade between 25 and 38. Delta neutral option strategy means, look at this, delta is negative 0.07. It's neutral. Silver can't be in both directions at one time. You're not gambling that silver will jump up, and you're not gambling that silver will drop down. You're making an educated guess that silver will go between those lines, not to the upside, not to the downside. You have so much extreme to both levels that the ideal goal is to silver to not do that and collect 95% not collect $820 in the process with 95% chance that this option will expire worthless. You do need, in order to execute this trade, look at this, $5,615. That's why I like selling options on futures, because I'm collecting $820. This is my money, and every day, I'm going to show you in a second, divide this by 5,615, 15% profit, 15% ROR, return on risk. If you divide this by 48 days, you make 0.3% a day. 0.3% a day. Don't say to yourself, oh, I watch all those YouTubes, buying calls on silver, and yeah, you could win. But if you take 100 trades, most likely you will win on 10, 15 and lose on 80 trades plus. I prefer to be on the side that wins on 80 plus, but the ones that I do lose, they're so extreme, if it does happen, I close the trade early and not get hit. That's the goal. Now this is the most important number to me. Theta decay, $38.15. Every day from now until expiration, depends. After 21 days left, this number will accelerate. Every day as of now, if all else is equal, this option will lose about $40, $37. So this right now, you see, it's from it was 8:20, now it's 8:05. Tomorrow, let's say Sunday night when the option market opens again, this should be theoretically 760. Day after that, 720. Day after that, 680, etc., etc. The goal is not to collect the entire amount. It's up to you. It's up to you if you want to collect the entire amount. Tasty Trade said to close the trade at 50% profit. So if this is 400, close the trade. I aim to close it around 80. So if this reaches like $200, I'll probably close the trade. That's it. You have a choice. You can also say to yourself, you know what? I don't want to wait too much. I just want to make $100. Wait 2-3 days. And this is, let's say this one is worth 700, close the trade, move on. It's up to you. This is $100 trade in like on Monday, theoretically. If this doesn't move, $40, make 120, close the trade, move on. It's up to you. It doesn't matter. It's up to you. Everyone should decide when to buy, close, and all that. I'm just here to show you a different way of trading instead of just YouTube filled with Robinhood cash secured puts, super non-efficient way to use your money. It's not efficient to use your money for cash secured puts. Go watch my channel about naked puts, selling naked puts on Apple, on Nvidia, and then put like 4,000 or 5,000 on the line instead of 20,000. Much more efficient use of your buying power. Subscribe, let's grow this channel, and see you next time. By the way, I added one-on-one Zoom call, something new that I want to try. If you want to book me for a Zoom call consultation, the link is in the description. I'll see you. Bye-bye.